Should you add Pidilite to your investment portfolio? Is Pidilite going to be a consistent compounder for you? Let's find that out in this video. Hi everyone, welcome to Stock Talk with Jay. I'm your host Jyotsna, and today we're going to analyze a company called Pidilite. Now, if you haven't heard of the name Pidilite, think of Fevicol, Fevistick, and Fevikwik. I'm sure you must have heard of these names. So these brands are owned by the company Pidilite, and that is what we're going to analyze in today's video. Let's understand the company's business and understand how strong Pidilite is fundamentally. Pidilite is the number one adhesives company in India and holds a 70% market share. It has such powerful branding that when people want a glue, they say Fevicol or Fevistick. The word Fevicol has become synonymous with glue, the same way Google has become synonymous with a search engine or Maggie has become synonymous with noodles. Pidilite owns popular brands like Fevistick, Fevicol, Fevikwik, and M Seal, Dr. Fixit, and Rangila Colors. They've run some exciting and popular advertisements that we all grew up watching. And their market penetration is so strong that they got rid of the middleman and marketed directly to the end consumer. Since glue is such a low cost and a highly crucial part of the project, the consumers do not compromise on the quality and go for Pidilite because they know for sure that Pidilite has good quality. Not just that, they keep innovating with new product research and development. For example, for waterproofing, they brought out their solution Marine X. For sunlight protection, they got out Heat X. And they make sure to stay close to the end users, which are the carpenters who use their adhesive, and they keep researching to innovate and find solution to problems. Let's take a look at the business segments of Pidilite. So the company operates under two major business segments: branded consumer and bazaar, and business to business. So 79.6% revenue comes from the consumer and bazaar products, and 19.7% comes from business to business products. Now let's take a look at the end usage of these two categories. Products like adhesives, sealants, art and craft materials are used under consumer and bazaar segment. Now, these products are used by carpenters, painters, plumbers, mechanics, even household students and offices. Business to business segment covers products like industrial adhesives, industrial resins, organic pigments, and pigment preparations. This caters to various industries like packaging, textiles, paints, paper, and leather. Let's now take a look at the growth drivers of Pidilite. Since the company gets most of its revenue from India, let's take a look at the growth catalyst for the Indian economy. So, number one is the home improvement area. This offers significant opportunities for growth given the focus on affordable housing, new construction, as well as renovation. The second factor is government spending. In programs like Rural Employment Scheme, this gives disposable income in the hands of common people, and higher capex spending focuses on infrastructure growth. In the short term, the company might face stressors like slower growth of the Indian economy, high inflation, and geopolitical tension in overseas subsidiaries. However, the medium to long term outlook of the company is stable and strong. Let's take a look at the operational aspect of the company. So the company has an established infrastructure and network of 30 manufacturing facilities and 34 co-makers across India. It has strong R&D infrastructure with 3 R&D centers in India and 2 in Singapore. The company has established an extensive pan India network with 4,700 distributors who service 2 lakh plus dealers across India. It has a global presence with operations in 9 countries and presence in 80 plus countries. Let's do some number crunching now and look at their financial statements. The PE or price to earning ratio of the company is 97.4. So even though it looks very high, but Pidilite is always going to have a very high PE because it's a monopoly and it's a stable debt-free company with a strong future. Its debt to equity ratio is 0.06, which is almost negligible debt. In terms of the last 3 years, the return on equity has been 22.8%, whereas the return on capital employed has been 29.6%. If you look at the current price of the stock, it's 2,571 rupees. In the last 1 year, the maximum price has gone to 2,919 and the lowest has been 1989. Let's take a look at the profit and loss statement of the company. In the last financial year that ended on March 2022, the company had a revenue of 9,921 crore rupees, which is almost equal to 10,000 crore rupees, and the net profit was 1207 crore rupees. If you see in the last decade, they have grown in terms of revenue 5 times, and in terms of profit, it's 4 times.
Let's also understand Pidilite's shareholding
Almost
patterns.
70% of the company's equity is held by the promoters, and FIIs hold 11.34%, whereas DIIs hold 7.73%. The rest of the equity, which is around 11%, is with the public.
So now that we are done with the fundamental analysis, let's now also analyze Pidilite technically and look at the price chart.
Now, this chart is for the last 10 years' price of the company's share. We can see that Pidilite has been a consistent compounder in the last decade, and its share price never goes below the 20-month exponential moving average. So, overall, Pidilite is a fundamentally strong company. It's a monopoly with a very strong brand presence and a very healthy balance sheet. That being said, please note that this video is only for educational purposes and please consult your financial advisor before making any investments.
If you like this video, give it a thumbs up. For more videos, subscribe to the channel. And if there are any thoughts that you would like to share with me, comment it down below. You can also add the company's names that you want me to analyze in future.